What's up, everybody? I just did a review on Rivian. Talk about a beaten up stock. Sheesh. It was over $100 at IPO. I think it IPO'd at 70. And then the first day it broke through 100. What's up, Quags? Okay, here it is. The bar chart, it's not as good because it only shows you what the closing price was. So the first week it started trading, it opened at 107. Yeah, Rivian, which is, that's like the highest opening stock price I've ever seen, 107. I thought I read 70. It opened at 70, or at least the IPO price is 70. Maybe sometimes, even though they say the IPO price is like 20, you can never get it for 20. Like it goes up right away. You don't even have a chance to buy it. So the first week, I guess this is the first week. Maybe if I get the daily. Why is this? Okay, here it is, daily. Yeah, it says the first day it opened at 107. Which is odd, but okay. Let's just do the monthly candlestick so it's easier to read. So in the first month, its lowest point in the first month was 95. Its highest point was 179. So that was definitely, Rivian is doomed. Yeah, I think they're doomed. It's really hard to tell. So 179, that was in their first month, and it's not even remotely close to that level ever again. Because you can see the second month, it started out at 120 and closed a month. Yeah, Toyota is the best car company. The second month, which is December 2021, it closed a month at 103. So it started 120, closed a month at 103. The third month, it opened at 106, and it closed a month at 66. And it just kept coming down. And then it finally plateaued in the 20s or 30s range for about 6 months. And then at the end of 2022, it took another crash into the teens. It actually did rebound in mid 2023. It got back up to almost 30. But now it's trading at its all-time low. So Friday, 2 days ago, it closed at its all-time low, which was 913. So if you want to pick up Rivian, I guess this is the time to do it. I think I definitely could see more downside because it's down like 90+% from IPO. I think 93% from IPO. I could see it coming down to like 6, 7. I mean, it'd be hard. I mean, it's not going to go bankrupt. At least not now. Not this year. They have a runway of cash to get through. I just don't see much upside. I did a video, and I'm at almost exactly where they're trading at. And I have to assume, like, if you want to know how I came up with the valuation, I showed in the video. I'll show you right now. So the way you value a company, or the way you value any asset, is you project the future cash flows you expect that asset to generate. And then you discount back to today's dollars, and whatever the dollar amount is in today's dollars is the value of the asset. So like if you value a bond, it's like a bond is like a very simplistic valuation, because it's usually a fixed stream of future payments. So you know the future payments. And then depending on the discount rate, because now with inflation, it's getting higher, the discount rate. So as interest rates go up, which is kind of a basic thing, you might know this already, as interest rates go up, bond prices go down. So if you have a 5%, 5% bond, and you paid $10,000 for it, so you get a 5% fixed annual interest rate. Maybe you get a monthly interest rate. If interest rates go up to like 6, 7, 8, 9%, you can't sell your bond for $10,000 anymore, because no one would pay $10,000 for 5% bond when you can get a 6% bond in the open market that's also trading at $10,000. So to compensate someone, you have to sell your bond. So if rates went up to 6%, maybe you'd have to sell your bond for $9,000, since the person receiving the bond is only getting paid 5% interest. And vice versa, if interest rates go down to say 4%, then maybe the value of your bond goes up to $11,000. Because if somebody bought a 4% $10,000 bond, they'd rather get your bond, which pays a higher interest rate. So to kind of adjust, you have to you raise the price. I mean, I've done this. I've shown you the math before, but I don't want to get into that, because I think I always seem to lose subs when I get into this type of detail. Not subs, viewers. Okay, so it's kind of like a guessing game. How do you value a company that has never generated positive free cash flow? Because if you wanted to buy if your friend wanted to sell his business to you, he's like, oh, I have this great business, and I want to sell it to you for $100,000. You would ask, how much money do you make from the business? And if he says, oh, I make, $50,000 a year for the business, then now you have some information. Now you can estimate if it's consistently 50 for, say, the next 10 years, or maybe it grows a little, then you can figure out the value of his business. But if he loses money every single year, so he goes, okay, I lost $50,000 this year, and you go, what about last year? Well, I lost $80,000 last year. So how do you value his company? Well, if you never think it's going to be profitable, then it's worth nothing. So then you don't have to value it. But if you have to assume he's going to generate positive cash flow or be profitable at some point to do the exercise. So if you assume maybe in 3 years he'll become profitable, now then you can figure out, then you apply a growth rate to that. So that's kind of what I did. It's similar to what I do with every video. So I use the analyst estimates for free cash flow. So this is on Simply Wall Street. So the free cash flow estimate for 2024 is negative 4.4 billion, 2025 negative 3.8 billion. And I'll show you on Simply Wall Street, because see, you can look at this box up here. I'll get rid of the revenue. So it's only free cash flow. So in 2023, they actually had negative 5.9 billion of free cash flow. That's actual. And then for all of 2022 is negative 6.4 billion. You can look at the top on the middle. Now the forecast, here's a forecast for 2024, negative 4.4 billion, 2025, negative 3.8 billion, 2026, negative 2.96 billion. So I just put that into my model, but I have to assume they would have positive free cash flow. And the way I do that is the revenue forecast for 2026 is 13.4 billion. See right here, 13.4 billion. But we already have it's already negative free cash flow in 2026. So I'm doing this for 2027. So to calculate 2027 revenue, I just grew at 30%. So I took the 13.4 billion times 1.3. So it's 30% more than 13.4 billion. So that's what I'm assuming their revenue will be for 2027. I could break it down. So 13.4 times 1.3 is 17.4. So I'm assuming their revenue will be 17.4 billion in 2027. And the average company in this industry converts 10% of their revenue to free cash flow. The average car manufacturer. I just assumed they would convert 15%. So I'm giving them kind of the benefit of the doubt. So I converted 15% of their revenue into free cash flow. So that's how I got the 2.6 billion of free cash flow for 2027. So it's a total guess. If I value like a company like Microsoft, my model would probably be closer to where it's a lot easier to value. And they usually trade within the forecasted free cash flow. That's how analysts come up with the stock price. So that's why it always changes every quarter, because when the company reports new guidance, then the analysts can update their models to come up with a new stock price. So that's how I did it. I came up with 2.6 billion of free cash flow in 2027. And then I just have terminal value, which is just a growth in perpetuity. So I assume a 2.5% growth going forward. And surprisingly, I'm pretty close to where they're trading at. My value for the company is 9.4 billion. They're 8.9 billion. So my stock price is 961. They trade at 913. Oil's unlimited. There's no reason for the price to go up. The market, there might be some negative reaction, but to the conflict, but it's really nothing new. There's always been these issues, and there's always wars and things going on. So I don't know. I just don't think it'll have much of an effect. If we were in a war, or if it was a country kind of like closer to us that we do business with, like in Europe or even Mexico, if there was big conflict there, that could affect us, or Canada. That could affect the market a lot more. But I don't know. I just don't see much of a. So here's So this is Rivian's sale every quarter. They just started selling vehicles in 4Q 2021. They didn't sell anything before 4Q 2021. They were still kind of like just building their factories and things like that. So they sold 909 cars in that quarter. So that's this bar right here. It's hard to tell. 909. Then 1227 in 1Q 2022. Then it grew a lot. It went to almost 4,500 in 2Q 2022. That's the number of car sales. Production is different. It could be the same, but chances are, like you can see in first quarter of 2022, they produced 2,500 cars because they need to have inventory to sell. And then they sold 6,500 in 3Q 2022, 8,000 in 4Q 2022. And then it went down to under 8,000. I thought this was mainly from like kind of like fourth quarter of the holidays. People buy more, they get more gifts for people, they spend more money. So that was my reasoning for why it went down. But that's just a guess. Then it went up 12,000 cars in QQ 2023. Then they hit their peak, the highest ever, 15,500 in 3Q. Surprisingly, it went down. I guess we can look through their reporting to see, maybe they'll explain why it went down, or if somebody knows on this stream. So it went down to 14,000 in 4Q, and it went down again to 13,500 in 1Q. So this is how the chart looks. It peaked here, and then it came down. So far, for the 10 quarters they operated, they produced about 97,000 cars. I think that this thing is wrong. Okay, so 97,000 cars for the first 10 quarters, which is how much? Which is a little less than Toyota produced in 2 weeks. I know they're different companies. I know it's hard to compare. So in 2023, Toyota sold 3.1 million cars, which means they sell 250,000 a month. Would you in the future compare defense stocks, General Dynamics, Raytheon, Lockheed Martin? I just did a video. I just posted a video this morning on Rolls-Royce, which is in this industry. But yeah. Thanks for the donation. But yeah, I'll do that right now. So in 3 weeks in 2023, any 3-week period, I'm sorry, what am I saying? 3 weeks. Every 2 weeks, every single 2-week period in 2023, Toyota sells 120,000 cars. Every 2 weeks. And it took them 10 quarters to sell 100,000. And this is a new company, Rivian, so it takes time to to build a customer base, to build factories, things like that. I'm just showing you the scale, the difference, how small this is. And at one point, I don't think Rivian was as big as Toyota. but they did 90. So they were about 10x the size. So they were 90 billion market cap at the peak. 90 billion. They were 90 billion at their peak, which was at the end of 2021. And Toyota was, I guess, about half the size as it is now. So Toyota was like 170 billion market cap, and they were 90 billion. It just goes to show you like how, I mean, Toyota was only twice the size of Rivian when Rivian IPO'd. I mean, Toyota has gone up like 50, 60% since that IPO, and Rivian has gone down 90%. But Toyota was only double the size. They would double the size, and they sell, I mean, every 2 weeks they sell more cars than it took this company 2.5 years to sell. It was obviously extremely overvalued. It's just hard to make money because Apple spent many years developing a car, and they just nixed the project. They just said, forget about it. It's not worth it. So if a company with pretty much more money than anybody else, almost, they have like hundreds of billions of dollars at their disposal, can't make it work, what makes you think Rivian can make it work? I mean, I'm not saying nobody can make EV cars profit with. It's really hard to do. Same thing with regular cars, with ICE cars. When cars became popular in the early 1900s, there was so many companies making cars, dozens and dozens. Probably hundreds of companies have gone bankrupt trying to make a car. And from early 1900s to early 2000s, only really 3 or 4 companies, only 3 companies, I think, succeeded for that time period. Ford, GM, because it's hard to. Let me look at the. It's hard to make cars make money, any car, especially EVs. EVs are even harder because cars are pretty complex. It's not like selling like furniture, like a desk. When you have electronics and you have like all those things going on, like a motor, transmission, you got to imagine how difficult that can be to make a profit. I mean, it's like planes. Could you imagine how hard planes are if cars are hard to make? That's why so few companies can do it. Sheesh, come on. OPEC keeps cutting production. Toyota is a bankrupt car company. Why do you say that? Because they have a lot of debt? God damn it. What the Okay, somebody asked for aerospace, so I'm going to just, well, somebody was nice enough to donate and asked about aerospace and defense, so I'm just going to pull it up. Okay, so aerospace and defense. Let me just hide this. So the largest company in aerospace industry is RTX, Raytheon, 142 billion market cap. Lockheed Martin is number 2, 112 billion. Boeing is number 3. Boeing used to be the biggest. The good thing about aerospace and defense companies is they, a lot of the revenue is from the U.S. government. And that's like the best customer to have, the U.S. government, because they have more money than anybody in the world, any company, any country. They're bigger. Maybe not China. China is now bigger than the U.S., right? But I don't think China spends as much money as the U.S. They're not as indebted as the U.S. is. But that's a great thing about being the U.S. government. You don't have to worry about paying back your bills. You can just print money or raise taxes. So anyways, it's a great company, Raytheon. They're trading at, although 45 times earnings, so it's a bit rich. But people who and I've gotten comments like this. And I used to think I have to look for the lowest PE to invest in or the lowest price to free cash flow. But it's usually the opposite, which is kind of confusing. Usually the high PEs and the high price to free cash flows are the stocks that grow the most. Because the reason they have such high price multiples is because investors are expecting the future of the company to be so amazing. And when a company has a really low price multiple, not that many companies only have a low price multiple, but when you see companies like Intel trading at 1 times revenue or 2 times revenue, while the other semiconductors are trading at 12 times revenue, you wonder why doesn't everybody just buy Intel? Because the stock keeps going down and they're losing more market share. So Boeing, you can see Boeing has the most revenue out of all these companies. So why doesn't everybody just buy Boeing? They're trading at 1.3 times revenue. They have more revenue than RTX because Boeing is it's probably going to keep falling, and nobody wants to buy a stock that's in a free-for-all. They're not going to go bankrupt, but there's probably not going to be much upside for a while. It could be, another 5-10 years. BA has that plane crash risk all the time, it seems. Yeah, and that's perception is so big in a market, and people perceive Boeing to have inferior products because there's all this concern about plane crashes, which I don't think is a concern at all. But when you have these documentaries, they have quality issues. But I think if you did a deep dive into any company, I think you would find problems and issues. Because I remember in like in grad school, we were looking at the quality of businesses, and if you looked at like the reviews, like customer reviews, we look at Ritz-Carlton, which is supposed to be an extremely high-end hotel. So if you go to a Ritz-Carlton, you expect to have like really nice amenities, nice service. But if you read the reviews, people, complain, I think there was bed bugs, or, this wasn't clean, or you could, if you want to find bad reviews on a company, you can find it on any company, because if you're like in a bad mood, you can go to the best place in the world and find problems. Oh, the line was too long. Oh, I think that the cashier, she didn't seem happy. She seemed a little rude to me. There was no forks. After I got my latte, there was no spoons. I asked, they should have spoons. You could always find, if you're in a bad mood, you will find problems with everything. But on the flip side, if you're in a good mood, like these stupid little things, you won't even realize them. Because so I don't know. That's why I don't think it's a big issue, the Boeing, because there are no crashes. There haven't been any crashes, right, with Boeing in a while. It's just the problems with the but that's not to say I would buy it, because it's all about market perception, and I think there's still a lot of downside, and if anything, it'll trade sideways for a while. But I mean, if you're looking to like 2, 3, 4x, it's hard to do it with north of 100 billion market cap. Of course, Nvidia was 200 billion and a 10x their market cap in like 18 months or less. So anybody can grow a lot. It just makes it a little harder. So if you like a Northrop Grumman, like a company like that, that's a good opportunity to 2, 3x. Just do a little due diligence. And so would this affect another stock like Southwest? I think they only use Boeing 757. Yeah, theoretically it could, I guess, affect an airline, but I don't think it'll affect them that much, because they can buy other planes, and they have service contracts with these plane companies. So if there was something wrong with the plane, they would either get it fixed or just replace it with another plane. But it's like, there's always issues. There's always like these like concerns about like companies and people or groups. It's always going to be like that. Most of it is just noise, and it's just kind of like if you see something on the news enough, like if they're always talking about something in the media, you eventually start believing it, even if it's not true. So you have to somehow cut through that noise and just identify what's accurate. That was what I liked about Southwest, is that they only operated one type of plane, so you didn't have to like worry about finding, like, if one pilot was free to fly, but he only could fly an Airbus, and if you have Airbus and Boeing, so it was good to have everybody knew everything. Yeah, so 737, except for a brief period when they operated a handful of 727 aircraft. Yeah, so I guess that's true. I guess maybe their stock could be affected. Yeah, it's just easier for everything. It's easier to maintain because when everybody knows everything, when your maintenance people only work on one plane all the time, it's hard. It's hard. Like if you're a mechanic, it's hard to know how to fix every single car. Like I'm sure if you're a mechanic, you can do an oil change on pretty much any car, but like to do more, kind of like one-off things, you can't really know how to the insides and out of every single car. That's why you have specialty people who only work on German cars or Japanese cars, or only well, if you go to Toyota, the manufacturer, then you know they're only working on Toyota cars. So yeah, how's Southwest stock been? So this is a good exercise. So you see Southwest. So compare it to other airlines to see, is it because of the Boeing thing, or is it just because this is just how airline stocks move? They go down. And everybody check out Victor's channel. He also does videos. He was on a live stream with me. So this green is JetBlue, red is Delta. So the red is Delta. Okay. Oh, the green is JetBlue. So in 5 years, JetBlue is down 63%. That's a lot. JetBlue is a great company. You wouldn't think they'd be that much. Southwest is down 45%, and Delta is down at 17%. So you can see they're really correlated, these airlines. They move together. It's almost like a commodity, an airline. Like a car too. I think a car is like a quasi commodity. Like there's not, like for a car, it's not that many variations. Of course, if you want like a really nice car, like you're into specialty cars, you buy Ferraris if you can afford it. Yeah, that's different. Those are way different cars when you kind of go north of $100,000. But between that $30,000 and $60,000 range, I think there's a lot of similarities. Delta is up 11% in 2 years. Look at JetBlue and Southwest. They're down over 40%. So if you were concerned about Boeing affecting it, I don't think Boeing has anything to do with it, because you could see that they're all down a lot. Because JetBlue planes. Because JetBlue is an Airbus company. Are they only Airbus? Yeah. Embraer. They also have a few Embraers, but pretty much Airbus. So they're an Airbus company. So it's not a Boeing thing. They're both down 40+%. That's just how airlines are. They're like the worst investments. JetBlue is down. Okay, maybe in the past year, Southwest is down 15%, while Delta is up 40%. But when you look at this chart and you see Delta is up 40%, and these stocks are not doing that well, that doesn't mean Delta has been knocking out of the park the past year. It might mean that, but there's a good chance the stock has gotten beaten down so much in the past. It has to be a recovery. Things have to kind of go back to the mean or go back to where they should be. You can't if a stock is extremely undervalued for a long time, eventually it will come back. And vice versa, like Tesla, if a stock is extremely overvalued for such a long time, it needs to come down to reality at some point. We just don't know when at some point it may be. But yeah, yesterday was a good stream. People were mentioning some stocks that I wasn't familiar with, so we were digging into those stocks. So let me know if there's some stocks you've been looking at that you wanted to go over, and we can pull up their 10K and try to figure out. Yeah, well, I did a Rolls-Royce video this morning. Rolls-Royce is a really interesting company because they've been around like 150 years. They're the second largest aircraft manufacturer in the world. The stock is up 400% in 2 years. So they're killing it because the stock was just beaten down so much. If you followed Rolls-Royce in like 2019, 2020, 2021, it was like on the verge of bankruptcy. Like they were really, really struggling, losing a lot of money. So it was bound to rebound. It was bound to recover because you can't, unless you go bankrupt, which they weren't going bankrupt. You got to recover at some point. Oh, a biotech company. These biotechs, I think there's more biotech companies than any industry in the world. There's so many these small biotech startups. Okay, thanks a lot, Victor. I'm sure it has hardly any revenue. They actually have some revenue. So a lot of these biotechs are almost like pre-revenue companies. 2.3 billion revenue. 11 billion market cap, so a 5.5. They trade at 5.5 revenue. United Therapeutics. Usually, when I first learn about a company, I like to look on Wikipedia because it kind of like cuts through the bullshit and just talks about the facts, or hopefully the facts. I just want to understand what the company does, really, because a lot of people think they know what companies do, but oftentimes they don't. Because if I said to you, what does Coca-Cola do? And you said they sell, beverages, soft drinks. And I would say, actually, they don't really sell many beverages. They don't sell soda. A little bit of soda, not really much. Most of their sales are not from soda. Pepsi, yes. Pepsi sells soda, not Coca-Cola. United Therapeutics is a public biotech company. It develops novel life-extending technologies for patients in areas of lung disease and organ manufacturing. That's the hard thing about like companies in the medical field. It's just not like, it just doesn't make sense. It's not like we talk about this stuff in real life. Like how often do you talk about lung disease and organ manufacturing? Unless, I guess, you're going through this. Like when I look at companies like that sell cars or phones, it makes sense to me. It's stuff I use all the time. So it is harder to kind of connect to these companies, but doesn't mean UTHR. Yeah, CRISPR looks interesting as a biotech play. Well, they're really simply Wall Street's at 608. The average analyst estimate is 285. One, 1.2, 1.3. Let's see. 233.11. UTHR. I'm just going to run it through the model, see what it comes up with. Wow, really low whack. That seems abnormally low. I'm going to give him that's so low. I'm going to give him a little higher whack. Gonna lower this. Yeah, it seems pretty undervalued, right? Even if I make the model more kind of conservative, no, aggressive. So if you look at a company in this field, biotech or pharmaceuticals, you want to like a few things. I guess it's kind of obvious, but like, well, let's open a 10K so I could. Is this not? Am I on the right website? United Therapeutics. Corporate reports. It doesn't look like they have any 10. I don't see the 10K listed or the 10Q. The latest report is 2022. Events and presentations. This is hard to find. Corporate presentation. Maybe this will have it. August 2023. So you want to see their revenue. You want to. I'm having a hard time finding any information, but you want to see their revenue, how they generate revenue. I was hoping to just see like the income statement, but you want to see how many drugs make up the revenue. Is it one or is it many drugs? What's in their pipeline? And and if they're getting close to like any drugs that are going to be expiring soon, because I think once you get FDA approval, you I think it's like 17 years you can sell a drug before others can start selling it on a generic basis. Okay. Our focus, $4 billion run rate by the end of 2024. 4 commercial platforms, 4 development programs, 4 registration studies, 5. So I guess these are the drugs they sell. And you want to, and their pipeline, there's usually 4 stages, the FDA chart. There's preclinical trials, then you have to go through phase 1, 2, and 3 before it's approved by the FDA, Federal Drug and and it could take literally like a decade to get through these phases. I'm trying to find a chart that's okay. Okay. So yeah. So when you need to, if you want to sell a drug, you have to get approval from the FDA. So there's preclinical trials. Then you have to go through phase 1, 2, and 3. So during each phase, you have to have a number of patients that you test. They go through clinical trials. So you have to see how the drug affects them. And you have to test different people. You can't just test like men. You have to test men and women. You can't just test white people. You should have a diverse people, all backgrounds, assuming your drug is going to go to a diverse amount of people. If it's only going to like kids, then I guess you only need to work with kids. But yeah, and then each time the FDA approves the phase, the stock usually goes up as they get closer to commercialization. But then you test more people at each phase, maybe varying amounts of the drug, because you have to make sure the drug doesn't have a really bad side effect. Drugs could kill people, and drugs can make them blind. Drugs can cause a lot of damage. So you have to make sure, obviously, when you test people, you test them at smaller doses and you increase it incrementally. And it could you imagine how much money you have to pay either a doctor or a nurse to conduct these trials? Then you have to pay a lawyer to help you draft up these documents. So it's a really expensive process. It could literally take a decade and $1 billion, at the high end, to get a drug approved. But if you get a drug approved by the FDA and you're allowed to market and sell it, you can make a lot of money. You can make, sky's the limit, really. So yeah, I mean, seems like let's see they have a nice revenue growth. It was 1.4 billion in 2020. Now it's 2.3 billion, and the forecast is 3 billion. So a modest growth into the future. Meme coins made millionaires from Zip. Thanks, Alex. 20 years for a patent. It used to be 17. So some companies like some of the big companies make like 20-30% of their revenue from one drug, and so they make $1 billion or several $1 billion a year from one drug. But after if you do get it was so if you do get patented for a drug, you have 20 years where only you can sell the drug and no one else. But then after 20 years is complete, then you can still sell the drug, but anybody else can sell it as well. But they can't sell your brand. What's it called? Like, what's a good example of something that? What am I thinking of? What's a drug that gets guys hard? I can't. It's hard to think when you have a camera in your face sometimes. No, that helps guys get an erection. Viagra. No, so if you who it's actually sildenafil is the name. Whoever invested, so Viagra is like the brand name for the drug to help people get hard. But after the patent is after 20 years, anybody can sell Viagra using similar ingredients, but they just have to call it something else, and it's usually 1/10 of the price, and it's just the generic form of Viagra. And most people would buy the generic form. But some people will still buy Viagra even though generic forms are out there, because some people just feel more comfortable buying, like psychologically, it makes them feel better buying the drug that has the brand name. Even though like if you go to the supermarket and you see the no frills paper towels or no frills food products, it's probably the same exact as the higher end brands, but people just feel more comfortable spending more. MPW is about to take off. The good news. Yeah, I was looking at that. Do you think MPW is gonna, because they sold some of the real estate. They sold some of their properties, but they still have the that customer who hasn't been able to pay them, one of their biggest tenants. All right, they announced a dividend. Yes, because the stock went up like 10-15% Friday evening, right? Yeah, 12% after hours. Was it because of the dividend that it went up? Okay, it announced its 15-cent dividend. That's a 15% dividend yield, because 15 cents, if you annualize that, that's 60 cents. 60 cents over $4 is a 15% yield. But it actually went up to $4.48. It's probably going to go up more. So that brought the yield down to 13%. but they did announce they sold the majority interest in some of their hospitals. Yeah. That it had sold interest in 5 Utah hospitals to newly formed joint venture with leading multi-strategy, multi-billion-dollar MPD has retained approximately 25% interest in the venture. Okay, so they sold some properties, but they're maintaining a quarter of the property still. So they're still going to get paid, not 100%, but partially. And the fund purchased 75% interest for $886 million, fully validating MPT's underwritten lease base of $1.2 billion. So they didn't sell $1.2 billion; they sold $886 million. They're maintaining 25% for themselves, providing $190 million additional cash to MPT based on its share price. Okay, so no, it delivered $1.1 billion of immediate cash proceeds before cost and reserves. The proceeds are expected to be used to reduce outstanding debt. Yeah, that's the thing. The Stewart thing, they didn't sell those hospitals that are connected to Stewart. They're working with a big company. They're working with a big company to sell Stewart, right? Despite its obtaining working financing, the other news about the troubled tenant is selling a business to United Health, and therefore that lease will move to a better quality tenant. Yeah, United Health, but that's a work in process, right? That's not a done deal. Stewart in distress. Stewart proposes sale of Doctors Group to Optum. Financially distressed Stewart Healthcare plans to sell its network of doctors to a division of the for-profit healthcare giant United Health Group for an undisclosed sum. United Health Group, is that part of the giant company United Healthcare? Is that? Well, that is United Health. Okay, so that's a pretty big player. A $500 billion market cap company. I wasn't sure. I saw United Health, and I was like, is that like a different? But yeah, that makes sense. But I guess assuming they can get Stewart back to, back to like either profitability or back to, paying rent and not potentially going bankrupt, it could be a great investment. It's kind of like a distressed sale, like buying an asset that's struggling and bring it back to life. And they're much more likely to make Stewart profitable again than just any company, because they have the know-how and obviously the capital to do it. So once that happens, once they clear Stewart, I think the stock will definitely go. I don't think it'll go back up to where it was, to the 20s, but I could see it going back up to like $10, $12 a share again. Obviously you have to look at the numbers more, but it's it's dying. It's really struggling. Yeah, it's trading well below its IPO price. Actually, it's trading where it was in 2008. Imagine you bought the stock in 2009 at the bottom, and you were up like 700%, and now you're back down to where you were originally. I mean, you are getting paid dividends, so, but still, that would be a rough ride. Yeah. So Rivian, I don't think it's a good investment. It's such a tough industry. It's kind of like, yeah, MPW. It's like, what if it goes back up to like 20 in 2 years? We'll be on the live stream talking about how stupid we were not to put all our money into it. I guess it's so easy. Like when Facebook went back up to over 500, it was so easy to say, "Oh God, why don't I just put all my money into it? I could have retired." But at the time when it's down, it's not that easy to just drop that much money into something. Even like just a 10, 20,000 maybe, but to drop like a majority of your investments is it's so it's hard to do. I mean, I guess I kept all my meta investments, even though the stock went down like 70%. So I guess that was hard to do and not sell, but I wasn't able to buy more, which I should have done. So Rivian, what the hell is, oh my God, this is wrong. I got to fix this chart. It's going to drive me nuts. Because free cash flow. A, B, C, D, E, F, G, H, I, J. Why do people invest in, like, they're always trying to like find the next big thing? Like they invest in car manufacturers. They invest in like, these marine shipping companies. Well, why just invest in a technology company? Why make things difficult? You should sell 1 quarter on the high. I have a hard time selling. I will sell if I sold my Intel because I was just losing faith in the company as a whole. But if I have faith in a company, I have a hard time selling, unless I need the money for something. Unless it's like personally I need money. But if the stock is doing well and I like the company, I don't like. I bought more Meta when it regressed. I don't know if yeah, I didn't update. I bought Meta recently, actually. That just shows you how bullish I am with Meta. Because when I sold my business at the end of 2021, I was gonna put it all into Meta because I was like, this is the only company I can see, I could pretty much, I have confidence in, but I didn't do it. I put it, and I was like, after 6 months, I was down 70% on Meta, and I was like, thank God, I didn't put it all into Meta. But now I wish I did, because now I'm up the most on Meta, even though it was down 70% at the worst point, because it was in January 2022. Because it was 360. That was like 380. It was 380 at the peak, and then when I bought it, it was like 330. So I was like, okay, good. I'm getting a discount, 15% discount. And then I went, whew. But I did buy it recently. I bought it because it was over 500, and then it went down to like 480 something, and I picked it up at 480. A bunch of shares. 75, it hit that low? I thought it was like 80, high 80s. I didn't know. It might have intraday. So, wow. Look at this month. In 1 month, the high was 328. The low was 190. So 1 month, it went down 40%. So the low was 92.60. 88 was the low, 88.09. That was the low. You know, I got it at 40. The very first day I started trading, I got at 40. So even though when I hit 88, I was still up 100%. But I got a 40, so it's not much. I can, but I did pick up more along the way. I picked up in 2017 at 150, and I bought a lot at the end of January 2022. I bought a lot here. What were we talking about? Yeah, I remember when I bought it, I was working. That's when I worked in New York City on Wall Street. I remember I bought it the very first day it started trading, and people were like, oh my God, that's so stupid. You know, I can't believe you're buying that. And then I was down like 40% after 3 months. It was in the 20s, maybe even more, maybe close to 50%. But who has the last laugh now? Okay. Yeah, I'll be right back. Politically not. Google, yeah, Google's a good value. It's taken forever for me to get to 40,000 subs. It was so quick to get from. I've been at like it's almost 2 years from 30,000 to 40,000. Because okay, so it took 219 days to go from 0 to 10. And actually, no, that's not right. It took 68 days to get 1,000 subs. 287. So to get 10,000, so from 0 to 10,000, it took 287 days. So 10 months. And then it took another 260 days. From 10 to 20, it took 268. I think because I kind of stopped making as many videos. I guess that's why. From 20 to 30, it only took 147 days, which I thought was pretty good, 5 months. But from 30 to 40, if I get it done by July 1st, which is my estimate, it would be 812 days from 30 to 40. It's just like, it's getting worse. It's like over 2 years to get these 10,000 subs. I did stop. I was making like every day I was doing a video. My first 2 years, every single day I did a video, and I was doing a lot of. And then I kind of stopped, and I was just making one a week because then I got a job. I guess that's the main reason. I'm trying to get back to. I guess it does make a big difference if you do a video every day. But I'm trying to get back there, trying to do like 3-4 a week. That's true. I think my views were a lot higher in 2020, 2021, and then in 2022 and 2023, it came down a lot. Everything came down a lot, views and subs. Hopefully 40 to 50 won't be as long. I guess I have to just keep making videos. I guess it's only a lot of videos. Like I can't take long breaks. It's kind of hard to look at because I wish. You can't, because I had the channel in 2012, but I wasn't making videos in 2012. I started making videos in 2020. So it's really hard to tell on this chart. Oh, here are subs. You can't really tell. This is when I started in 2020. And you see this, I actually was losing for about 6 months. I was losing subs, losing about 10 a month. You see these negative numbers? That's when I was only doing one a week when I got that job at the hedge fund. They didn't want me to do videos. And he has $20,000 in ad revenue in 4 years. So I make about $4 an hour, $4 an hour. So it's illegal. They're illegally paying me the below minimum wage. YouTube is okay. No one cares about that, right? So here's a top 20 car manufacturers. Yeah, I appreciate that. Well, that $20,000 includes everything, super chats, everything within YouTube. I probably made like 5,000 outside of YouTube because I appreciate that. I think like when I watch videos of those guys with 1 million subs, what's that guy? Kevin, Meet Kevin. Like I'm like, they're providing like no value, and I like they don't even say things correctly all the time. But it's all about kind of entertainment for them. It's not really about learning the stock market. It's an entertainment, and I don't really provide the most entertainment, I guess. So that's just how it is. But it could be worse. I mean, at least at least you guys are watching, which I appreciate. It's enough people to do it. Because if I in the beginning, like my first year, I would have like 1 or 2 people in a live stream. So I didn't even do it because it was weird. But now at least I have some people who are interested. Invested for 3 years, $100 a week. That's the way to do it. That's what I tell anybody, because a lot of people I have a different mentality. If I have money, I invest it. I don't. But I understand people are concerned. They're like, I don't know when to invest. I don't know what to invest in. I'm just saying, and I don't know how much. And I just say, just pick a dollar amount you're comfortable with. And every week or every month, you put that into your brokerage account and put it into like an index fund or something. Or if you want to invest in a stock, put it into that stock. Last February, 64% down. Yeah, I was down a lot too in 2023. But the past year, I'm up over 100% in like the past, even maybe less than a year. I hope it stays. I mean, it's really due to Meta. I mean, because Meta went up like 400% from the bottom. Yeah, so in the past 12 months, I'm up over 100%. Meta was the big one. Berkshire Hathaway is the second biggest. Actually, what the stock that's up percentage-wise, I think the most, because I got it at a real low cost basis. I'm up 180% on new holdings. I got it at 4.25. This was a nice surprise. I got it. Let me see. Yeah, June 2022 at 4.25. So around right here. I mean, I almost caught at the very bottom. I think the bottom was like 350. So I mean, I got real lucky on that. Yeah, it's crazy. 460%. What a. So I mean, but if Meta crashes again, so will my portfolio. But my wife has Costco. That's been doing the best in her account. That's up a little over 100%. Plus, we got that special dividend, so it's like another 10% from that dividend. That's the two stocks I said were my favorite, Costco and Meta. So it worked out. Thank God I didn't pick stocks that went down a lot. Although at one point people were saying they lost on Meta because of me. Yeah, Costco, we got a. April 2021 at 355. So you're right here, Costco. Has a long history, Costco. The thing is, we bought it here at 355, but look at how much it ran up before that. I don't have any REITs. I don't know. I think they're good investments. I think some of them, but I don't have any REITs. I have Energy Transfer, which is not a REIT, but that's doing really well because I got that and it pays so much in dividends. I got $8.64. So I'm up 100% with the dividend. My worst, well, I own Johnson & Johnson. I'm down the most in terms of dollars because I put a lot into it and it's down like 15%. Yeah, I got it at 170. It's down like 15%. Yeah, MLP. Percentages, Apcellera, I think I'm down like 50% or 60% on Apcellera. I put a lot into it too, so took a pretty big hit on Apcellera. And Pets, I'm down like 60% on Pets. See, I try to do this like different strategy where I'm trying to like find small cap stocks, and it never works out. It's almost like playing the lotto. Like I want to like get like a really big hit where I make like millions. Like if I put 50,000 into like Apple, or 50,000 into certain stocks at some, 20 years ago, or even like Nvidia 50,000, I could add 5 million if I put it 2 years ago. Do you activate drip? No, I don't have a drip. But what I've been doing with all my dividends in my wife's account, I've just been putting into Microsoft for the past 6 months. Because I didn't have anything in Microsoft. So I'm like, I should stop building on Microsoft. So I've just been putting in, which is good. It's up like 10, 15% in just like 3 months. So I've just been buying it like, do I have the cross basis? I don't know the cost basis. Oh, Netflix is doing well. I'm glad I got that. That's up like 60, 70%. I had a feeling, because I wanted to buy it for a while and I missed the run up, and then it hit 700. And then I got it at, I got it at 388 in January. So I got it after this big drop. I think this was from Bill Wong, right? That's why it dropped. Bill Wong made it drop. So I got a 388. So I'm like, this is great. It's down 50%. And then I was down 50% after 3 months. I wish I bought more. Of course, I thought I was a good price at 388. So I was happy with that. But now it's I'm up like 70% or so. So I'm happy with that. I didn't time it perfectly, but it's crazy. Look at this drop. Yeah, meme coins. Like I should have bought Dogecoin. Bitcoin too. Those are good investments. They've gone up a lot. Yeah, it's kind of like Meta too. It's like crazy how low it got. It's such a good company, Netflix. It's such a powerful brand. And people are saying, they don't have a mode, or they don't. I don't really believe that. I think they kind of have a moat in a sense where it's just too expensive to compete with them. That's kind of like their moat. Yeah, I remember Doge. It went from like 50 cents. Unless it got up to 75 cents. It's 74 cents. It peaked, and it was well under a penny for a while. And it went to 74 cents. That's when Elon went on SNL. That's when it peaked. And we all knew it was going to come down. So then it didn't go down much the following month. After that, it got to a low of 28 cents. But it really, really came down to 6 cents. But it's hard to know when to pick it up, right? I guess around 10 cents would have been a good time to pick it up. But yeah, bottomed out at 5-6 cents. But kind of like the crypto bull market has been, and Bitcoin too. Bitcoin's up about 300%, right? So in 2 years, Bitcoin is up 200%. I don't know. Here it is. Year to date, Bitcoin is up 44, Doge is up 63. For the past year, Bitcoin is up 100%, Doge 70. In 6 months, Doge is up 150%. It's down in the past month, though. I don't buy any crypto, though, but Nvidia is coming down, right? It's really not come down that much, but it peaked at 950. So it's only down. It's I guess it's down from 950 and then it went to 850. It broke through 9 again. Now it's hard to buy it, right? I think I'm just gonna give up on Nvidia and trying to make money on it. I don't think I'm gonna. Okay. What are the best performing REITs? I can't buy it. I have exposure to it through ETFs. That's the thing. If you own, like, I own a lot of SPY, so I do have exposure to a lot of these stocks. So it's not all bad, I guess. REA. Gladstone. Care Trust. REIT. Healthcare facility. Yeah, I think they're saying commercial real estate is headed for a big decline. So could be maybe if you want to short the REIT market or commercial real estate. Care Trust. That's the thing with REITs. You don't really need many employees. It's just really, it's really about the on the corporate level. There's no operations really. They just kind of like lease out space. So the only operations is the employees who have to kind of like organize, like, you know, find people to lease out the space to and accept the payment from them. But they don't have to actually run the hospitals or whatever the facilities they lease out. $3.19 billion. The thing with REITs, which is makes it hard to value, is that they have to pay out 90% of their earnings in dividends. So they can only retain 10%. So that's a nuance you have to consider. And also there's so much depreciation. So you can have a company with a big loss on their income statement, but they're still generating a lot of cash flow. And it could be like a decade of a net loss and positive operating cash flow. It seems odd, but when you buy all these properties and spend billions and billions of dollars, the amount of depreciation lasts a long time on real estate. It's enormous. Yeah, so funds from operations is probably something you want to track, as opposed to and they should list the funds from operations in the 10K. Where's the income statement? Okay, so okay, so operating results. Well, this is kind of like the income statement. Rental income. Okay, here it is. So it's pretty consistent, 190 million a year rental income. Then interest, because a lot of times companies have investments, or in their case, if instead of leasing the property, they may sell the property to somebody, but they fund the sale themselves. So it's like they provide a mortgage. They act as a bank and provide a mortgage to the tenant, and they pay principal and interest. So this is the interest they receive from those payments. So 218 million of revenue. And we do have net income of 53 million. Last year, they had a net loss because of an impairment. That's another thing. It's so many fixed assets on their balance sheet, the properties. So they not only do they have depreciation, which is 50 million, they might have an impairment. They have to write down the value of the asset. So that could bring down give you a net loss. But most of the time, they're still generating a lot of cash flow, because you could see the net profit for 2021 was 72 million. Then a net loss the next year of 8 million, then a net profit of 54 million. But you can see how smooth cash flow is. It's pretty consistent, because cash flow kind of adjusts all the accounting stuff. Because for operating cash flow, you have to add back depreciation, you have to add back the impairment. But if they show funds from operations, that's usually what people use for REITs, to look at REITs, funds from operations. Unvested balance. It must be somewhere. I don't even see it. Okay. Normalized funds from operations. Funds from operations generated. They usually have a chart in a 10K showing you the funds from operations, how it's calculated. I don't know why it's not here. Well, it is similar to operating cash flow. The only thing different is it excludes the gain on the sale of real estate. Here's their rental income by state. This is a medical REIT, right? They lease out medical properties, healthcare. So 30% in California. There are most states. It's just so much information to look at. Like, you don't even know where to start sometimes. If you want to get used to, usually the presentation is a little more user-friendly. The presentation, because it kind of like shows you the more, I guess, important things, or the high level, and it's easier to read. Elderly extended living with healthcare. Okay, yeah, that's a popular industry. So they have 23 operators, so 23 companies that lease from them. In 25 states, 207 properties. And the way they usually compare each other, because it's hard to compare properties, it's hard to compare operators, because you don't know if somebody has 207 properties, that doesn't mean they're bigger than somebody who has 180 properties. Because a property can have, they usually compare them by beds. Because if I have a property with 1,000 beds and you have 5 properties with 50 beds each, even though I have 1, I'm still a lot bigger than yours. So $2 billion of investments, $2 billion, and isn't there market cap $2 billion? Oh, $3 billion. $3 billion market cap. And then you can look at the properties they invested in. So it's pretty high level, but it's a little easier to read than a 10K. So they just summarized 2019 through 2022, how much they invested. And then they give a detail on 2023, like the date, the operator they lease it to, the property type. I gotta remember. I don't want to say this wrong. You're right. So SNF is a skilled nursing facility. ALF is assisted living facilities. And all this information can be found in the 10K. And ILF is independent living facilities. So it's just a little different because depending on the people who are in these places. And so momentum, because if you want to operate, what's it called? A skilled nursing facility. Okay, so if you want to if you were looking to, like, you might be a nurse or you just might be a businessman, and you wanted to operate a skilled nursing facility. That's just an inpatient rehab and medical treatment center staffed with trained medical professionals, and they provide medically necessary services of licensed nurses, physicians, and therapists, speech pathologists. So you would have to organize the operations. You'd have to hire these medical professionals, and then you'd have to fill it with patients. But you might not have, it might cost like $10 million just to get the facility and to, retrofit it to what you need. Then you need to spend another few million to hire staff and get the equipment. So not everybody just has $15 million to drop. And if you want multiple facilities, then you need, say, I'm just throwing out a number. I mean, it could vary widely. So if you were looking to get 2 facilities, you need $30 million. Well, let's just $17 million to get 2 facilities. So the way it works is just you would go to the care trust, you would contact them, and you would say, I have expertise in this field. You probably want to already be operating these facilities already. Say you operate one in your state because you had money from your previous job. So you were able to start one on your own, but you wanted to get 2 more. You need $17 million. So you contact this company, the REIT, and you explain the situation. You got, they have to obviously feel comfortable with you that you're a good investment. And if they do feel that way, then they spend the $17 million to, they pretty much just give it to you and say, yeah, go find the facilities, staff them, find the patients, but you have to pay us every month X amount of dollars, your lease payment, and you keep all the profits. It's your business. So that's just how it works. So all the chapters living gets 2 facilities. And if it's a good tenant, this is a good tenant, they're paying on time for years and years, then this company is more than happy to give them more money so they can get up more facilities. So that's pretty much, I mean, it's just, I mean, you guys might know this already, but if you want to, some of us already, I used to own real estate, and then I rented out to people. I just only had 1 or 2 places. But if I wanted to do it on a larger scale, like have 10, 50, 100, I probably couldn't do it. So that's the point of people investing in REITs. They don't have the funds to manage 100 properties, nor they have the know-how how to even do it. So they just give it to a REIT, and a REIT does that, and they get a dividend payment. So it's just a way to manage real estate on a larger scale. Siemens. Is this a Dutch company? Oh, Germany. Octane, Siemens. Siemens, that's a company that sells beds. It's a big company, 150 billion. I wasn't expecting that. And their numbers are in euros, which is convenient because a euro is roughly a US dollar. It's pretty close. We could just assume it's US dollars. So 55 billion up to 78 billion euros. They make electrical supplies and other stuff. So it is hard to look at numbers because you really have to compare it to the size of the company. That's why price multiples, you can see how the company's trading. Because if a company is generating $100 million and their market cap is 100 million, that's like they're trading at 1 times revenue. But if their market cap was $1 billion, they're trading at 10 times revenue because 1 billion is 10 times 100 million. So they're trading at less than 2 times revenue, which makes sense because their market cap is 146 billion and their revenue is a little less than 2 times, about a half that. Or their revenue, the market cap is twice their revenue. $1.74. That was in euros, so we would have to convert to US dollars because we're looking at the stock that trades in the US. But they're pretty similar. It trades at 3 times book value, 15 times earnings, which is pretty good. It was 12 times earnings. The forward PE is just you're projecting what the future earnings will be based on the projections, which is the company's projections. Their forward PE is 16. They pay out 39%. Payout ratio is the percent of their earnings they pay out in dividends. So if you do get a dividend, you want to make sure the company can afford it, right? So they have a yield of 3%. So I'm not sure if you would get the 3% if you lived in the US. I know like there's taxes. If it's no, but this is it trades in the US, so I don't know how that works. If you get the whole thing or SIEGY. It seems like a pretty solid company. Germany is one of those countries that's a pretty safe, pretty strong economy. Like Canada, the UK, really kind of like not much risk. When you get into the Chinas, the Brazils, there's a lot of country risk, and the stock doesn't. And even if the company is really great, the stock can't go up past where it should be because of the country risk. There's like a cap. So Siemens. Okay, it's right here. Siemens is a German multinational conglomerate, operates Its operations encompass automation and digitalization in process of manufacturing industries, intelligent infrastructure for building and distributed energy systems, rail transport solutions, as well as health technology. Rail transport is so big in Europe. I mean, it's big everywhere, but Europe, it's pretty significant. It's much more significant than in the US. Siemens is the largest industrial manufacturing company in Europe and holds the position of global market leader in industrial automation and industrial software. Yeah, I would imagine, I mean, 150 billion market cap. I mean, that's probably, you know, there's not that many companies bigger than that. Maybe 60 companies, 70 companies in the US bigger than that. Yeah, they got them undervalued. The analysts have them undervalued a little bit. $8.5, 10, 11. $91, 146. So I have a 20% discount. 20%. I mean, the past doesn't matter. If you're looking to invest in a company, the past is irrelevant. Like, would you buy it based on today's price? But the reason I like to look at the past, if a company like was trading at a higher number in the past, like if a company was $500 a share, now it's 200, then I know there's potential it could get back up there. When it's trading at an all-time high, that doesn't. I'm not saying there's no potential to triple from that point. I'm just saying it just gives information. That's the way you find out about some companies, if you actually you see them or use them. It tripled since the COVID bottom. It was 65. It broke through 100. Well, at least it came down a little bit. It's down 10%. But I don't think there's that much downside. You know, of course, anything could go down. In the long run, it doesn't look like there's that much downside left. It doesn't look like it's trading at a real big discount. Or trading, it's overvalued. Now it's getting backed up. They might have just split or sold off part of their business. That's definitely something I would like try to figure out. They must have like divested something because it's too dramatic. Usually when revenue goes down, it's more kind of like there's a blip, like 2020 happened, or there's there's some crisis, but then it goes right back. There's like a little blip and it goes back to where it was. But this kind of like came down and just stayed down and just moved with inflation. So it looks like at the end of 2018, possibly 2019, they split apart or sold something. They signed an agreement with the Iraqi government to rebuild 2 power plants, which is believed to set up the company for future deals in the country. Siemens portfolio revenue. I wonder if this is even right. If it really was 52 billion in 2019. I think that could be wrong, because according to this, their revenue was flat in 2019 and 2020. It came down in 2021. Yeah, I don't know. It looks like a pretty good company. What industry are they in? Specialty industrial machinery. $150 a week shorting. CCI. Oh, Crown Castle. Yeah, Crown Castle, that's you should buy more. Look how much it's 50% 2021 levels. Why is Crown Castle down so much? Did something happen? Crown Castle. Do they have like a bad tenant like MPT? Provider of shared communications infrastructure in the U.S., headquartered, operating 100 offices worldwide. Its network includes 40,000 cell towers, 85,000 route miles of fiber supporting small cells and fiber systems. But that sucks when you're down a lot. It's hard to hold. It's easy after the fact, and you like in my situation with Meta, it's easy now. It went up. Now I'm like, oh, I'm so smart. But when it's down, you just don't know. It is hard. Let's Crown Castle. What industry are they in? I know they're REIT, but specialty REIT. Okay. Don't give that much information. Okay. Crown Castle. Simply Wall Street has these articles too. So instead of like going to the company website and trying to dig through all their articles, you can just on Simply Wall Street, Crown Castle chief announces chief CEO change. So that's a big deal, changing CEOs. Stephen Moskowitz, a CEO. Do you know why they got rid of the old CEO? Was it a problem, like not performing well? Down 9%. That's actually that's pretty good considering they're down 50% in 2 years. They'll never say anything negative about Tower Business. During his tenure, American Tower's U.S. operations became a larger, more profitable. Served as CEO of Centennial Towers. Prior to Centennial, he worked at. Who was the old CEO? What was his name? Crown Castle presents a buying opportunity with a 6% yield. 6.5%. So they raise their dividend each year. It was 80 cents over $1 up to $1.47. So that's nice. A nice. If the stock does go up to like 120, 130, they're eventually going to keep raising their dividend, and your cost basis is low. So you're going to be making an amazing yield, assuming it goes up and you hold it. Crown Castle sold off its Australian assets in 2015. I don't see. Oh, they did an equity offering, so they did some dilution. Has filed a follow-on equity offering, an amount of $750 million. And at the market. Full year EPS exceeds. Crown Castle Investor Relations. Let's look at SEC filings. So revenue, it was flat from 22 to 23. Investors don't like that. So 2022, is that when the stock started? Yeah, so it peaked at the end of 2021. 2022, it went up maybe 10% and then flat in 2023. It came down a lot in 2022. 2023, it kept coming down. So that was the resistance, I think, that 80, the mid 80 level. So even though they didn't have a great year in 2023, that was kind of like the resistance. And it may trade, up and down, but it's going to break through 150 at some point this year, assuming they get back to like a revenue growth, and they need to outperform 2023 revenue and 2022, of course. Yeah, net income is down. Expenses are up. Cash flows are up a little bit. So they do have more cash flow in 23. But 22 is identical to 21 for cash flows. They had to add a bunch of debt in 23. And of a facility. It doesn't look like anything extreme happened, just their numbers aren't really going up. But it's not like, if it was a situation where they have a tenant that's not paying, like in Medical Properties Trust, that's a big issue. Approximately 53% of the company's towers are leased or subleased, operated and managed under master lease subleases. With AT&T and T-Mobile, the company has the option to purchase. So they have 40,000 cell towers. So that's their big asset, is to have these cell towers. So the people who they lease out their they have 100 offices they lease out. So those people who work in the offices have the ability to go on the internet and do their work. But it's not just those 100 people, offices. They also, cell towers also used in other companies use them as well. And they lease that out. But they don't own the cell towers, it looks like. They lease them from Verizon, AT&T. Yeah, Alex, right? You want them to be more efficient, save money, but they're like, okay, we have to fire you. Like, wait a minute. I don't want you to save that much money. So if you own a cell tower, they own a lot of cell towers. Okay. So a cell tower, you could rent a cell tower from $500 to $3,000 per month. The number of wireless carriers leasing space or collecting on the cell tower is another factor. Like I understand the concept of cell towers. I was always just a little kind of like curious of like how many companies can use that cell tower. Like does anybody know that? Like I know the purpose of cell tower is so people can, use it to like get on the internet or charge their phones or whatever, all different things. But yeah, how many, like, I don't know how to monetize it. That's what I'm saying. Does anybody know? Can I own a cell tower? How do I make money off of it? First of all, a cell tower is just a physical tower, usually made of steel to place network radio equipment, mainly antenna. If you own a piece of that land, you can own your own cell tower and base station equipment. My company would love to sell it to you, but you cannot switch it on. The problem is cell towers use licensed spectrum, and those licenses are normally held by a mobile operator. You can buy a lease a femto cell from your operator. This is a small indoor cell similar to a souped-up Wi-Fi access. I guess on a high-level basis, they own I thought I would talk about it. Maybe it probably explains it. So we own and operate leased shared communications infrastructure. They own 40,000 towers, approximately 150,000 small cells on air or under contract, and then a fiber line. So they provide access, including space or capacity, to companies using long-term contracts in various forms, including lease, license, sublease, and service agreements. We operate a REIT for U.S. Okay. So I think they lease these towers from like a company like AT&T, and then they sublease, I guess, space on those towers to various companies looking to. Oh no, they're tenants. Our largest tenants are T-Mobile, AT&T, and Verizon, which account for 3/4 of our revenue. Okay, so they lease it to these companies. Okay, that makes more sense. They own these towers outright, from what I understand, and they lease it to companies like T-Mobile, AT&T, because these are the three big wireless companies, and they need to have the most access to these towers so they can make sure their customers are able to use their phones without interruption. Site rental revenues represented 94% of our revenues. 66% were from towers and fiber segment, within our fiber segment. That's interesting. So let's see, site rental. So that's how they rent. So site rental is most of their revenue, 6.5 billion, 4.3 billion from the towers, 2.2 billion from the fiber, like the fiber lines. You would think, why doesn't AT&T and Verizon own their own towers? Why do they have to rent it from this company? I'm sure there's a reason. I'm sure it's probably easier to rent it than own it. They're probably expensive to own. Is anybody into this topic, or is this kind of running dry? Did I beat a dead horse? Towers operating profit decreased 4%. So it's really good margins, remaining terms and years. That's a good thing about a company like this, is that they lock in these contracts for 20 plus years. 41% of their towers have contracts locked in for 20 plus years. Remaining terms. The following table summarizes our rights to the land interest under our towers, including this is the land underneath the towers, and they own 29% of the land underneath the towers and 41% of the land. Oh, that's the gross margin. And this is how much they're leasing the land the towers sit on. And these how long the lease. Cell towers are a hard sell. Why do you say that? Why are cell towers a hard sell? It seems like a pretty important, thing for a lot of companies. They need because if I'm gonna use my phone to call and text people, if I if I get kind of knocked off, like I'm talking to a friend and it just hangs up because I don't have good connection, I'm probably going to switch service eventually. You need like smooth service. Omar, what's up? Thanks. My only question is that why can't they just own these towers? Why do they have to rent it from companies like this? Maybe it's just really expensive. A tower. Well, that is expensive, $300K for a cell phone tower. Well, not a cell tower, whatever you want to call it. That is a lot more than I thought it would be. And they have 40,000, right? That's a pretty big asset to own. $40,000. So I'm sure each tower is not worth 300K. Their towers are probably a lot cheaper. So if each tower was 300K, it would be 12 billion in assets, which is definitely not 12 billion assets. We could look on a balance sheet to see how much their assets. So it would be right here, 16 billion of assets. But that's all their property and equipment. It's inclusive of the cell towers. So their cell towers, which would be the communication infrastructure, is 25 billion. Which is, no, I was at 40 billion, so it's not that far off. That's a cost of a new cell tower. I'm sure they're not paying the high price, so that makes sense. They're probably getting it at better deals. Like they probably buy more than one at a time, so they're probably half price. Oh no, I was at 12 billion. I was at 12 billion, and actually it's 25 billion. So it's higher. 25 billion. But they depreciate every year because they're always buying new towers. And as you depreciate, it gets less and less, lower in value. Because the useful life is 1 to 20 years. 22% of the company's towers are leased or subleased. Okay, so they don't even own 22% of them. They own 78% of it. Under master lease agreements with AT&T for a weighted average term of 28 years. The company has the option to purchase the leased and subleased towers from AT&T at the end of the term for $4 billion. Which payments... Okay. Okay, I think we beat this dead horse. Yes, I'll be right back. Actually, okay, yeah, 5 minutes. 5 minutes. Okay.
Oh, it's 0. Did I miss it by a lot? Anybody? Ate too fast. Any other stocks? Let me get something to drink. Credit card stocks. I don't think I've ever bought a credit card stock. God. eBay, is that a good well, it's not a credit card, but I was thinking like a Venmo when you said credit cards. Are you talking about like Visa, MasterCard? It's a really good business. It's a high margin business. Lots of profits, lots of $566 billion market cap. So the top 130 billion is number 100. Well, this is all countries. What's happening? Not much.
I use this website just because they gave me free access. Business Quant. I do like it though. I was hoping to look at all stocks. Shit. I want to get like a. let me maybe go to E-Trade. I want to go to a screener. Parlay. I've never seen. This is what I did to try to like I had a new strategy I was gonna like put a lot of money, a decent amount of money into like a couple of small cap stocks. So I did all this research and there was a waste. I ended up losing most of my money because PetMed Express I bought. So like if you let's try to do, I guess we'll just do all the all stocks. What industries did? It's so hard to figure out, right? What industries should we do a screener on? We should let you do it. I'll just do all sectors. What I did was I did a search for like low PE ratios, low like companies with low debt, with positive cash flow, and it's almost like you have to do the opposite. If you want to make money in the stock market, you have to do the opposite of what you think you should do. or just buy an index. Like, don't try to like figure it out because the market is efficient. It's so efficient. It's so hard to make money. Because I was watching this guy talk about Warren Buffett, how it wasn't like he was a great stock picker. He just figured it out before everybody else did. So he was able to like find these really great values before, like 50 years before all these people did it. So now there's so many people who have these funds and indexes. So it's so hard to make a great return. It's just so hard to beat the market. And if you do, it's just pure luck almost, because very few investment managers beat the market. And if they do beat the market, they don't do it consistently. They'll do it once or twice. Wood? What is that wood? What is that a wood? Timber and forestry ETF. So it's so hard to like, if you want to try to be like Warren Buffett and do like figure things out, it doesn't work. We can try it. We'll see if we can figure it out. So what do you think? Should I go for a low PE? I actually think a higher PE, more growth potential. You would think a low PE might be better because it's a good value, but I don't know. And do you think a company has negative free cash flow because maybe they're investing a lot for the future? I guess that's why screeners, probably if you're a really good investor, a screener won't help. And companies with a little debt, is that the idea, to pick those companies? Or is it, or maybe it's better to have a company with a lot of debt because they're scaling and they're growing? I think companies within 20% of their 52-week low, instead of trying to like buy a company at the top, let's get them while they're cheap. It's hard to like track every single company and like see when the price goes up or down. Maybe the PEG ratio. Maybe we should that takes in the growth. So a low PEG ratio, would you consider that good? I guess. So let's go below 1. Because I'll show you the PEG ratio. So it's the EPS over the growth, projected growth. I guess we'll just do under 1. Because I did all these parameters, like I'm like price to book below 1, price to sales below 1, positive cash flow. And when I try to outsmart the market, I'm like, I can't deliver. Percent owned by institutions. Maybe we want a stock that's not owned by institutions, so we can like identify it before everybody else identifies it. Because if you buy a stock that everybody owns, is BlackBerry a good buy? Are you crazy? I haven't looked at them in a while. Crackberry. I don't know why, but I always look at historical stock price, even though like I tell people that that's a waste. Remember BlackBerry, the BlackBerry phones? Everybody had a BlackBerry, especially if you worked in like corporate America. It was just such a popular phone. And then iPhone just like crushed it. It wasn't even like, but iPhone isn't doing that great, right? Isn't it like, isn't it like kind of like falling a little bit? Phone sales by year. Smartphones by year by manufacturer. Number of smartphones sold to end users from 2007. And even smartphones are coming down. Like remember when smartphones became popular, and then people like, this is the new computer. But look, it 2018 was the peak, and now it's coming down because there's other things. The military used BlackBerry for years after the iPhone came out. Yeah, I'm sure a lot of people still use BlackBerry, even if the iPhones. It does take a while to switch, especially if you're a big company or a big entity. Phone sales. Okay, we're not going to get by manufacturing in 2023. That's another thing. When you look at these stats, sometimes they're just wrong. So it doesn't even give you the greatest data. Because even when on this channel, like I bring up charts and they're wrong. And I'm like, how can this be? And then we look at a 10K to figure out what it really is. So Apple, so in Q4 2023, Apple was 23%. They were 24% in Q4 2022. It looks like Q4 is a big Apple year. I mean, I bought 2 Apple phones in Q4 2022 from me and my wife. Samsung, that's catching up, right? Samsung, the Chinese phone, Xiaomi, Oppo, that's the Chinese, that's another Chinese phone, Oppo. It's likely because if half of China uses a phone, then it's like 10% of the world's phones, because it's just such a big country. Vivo's in there, and then all the rest. Another Chinese company, Vivo. So iPhone. What was I thinking about? So is BlackBerry a good investment? Well, let's look at the model. It's 1.8. Okay, 7.8 WACC. BlackBerry. Yeah, RIM, Research in Motion. That was the name of the company. Then they just changed the name because that was all they had was BlackBerry phones. So not much, very little free cash flow. 30. It's actually valued at 30.57. Now it's hard to value because they don't have much free cash flow growth in the future. Yes. What do you guys think about BlackBerry? You think it's a good value? it's just hard to invest in like something that's so far removed from society that no one buys anymore. I mean, look at their revenue projection for 2027, 2.4 billion. Let me actually do my other model, because my other model may be better. Because if a company's not generating much free cash flow and the future is projected to be high, then it's probably better off to use the other model. Yeah, this is a little rough. Let's. Wow, they're really projected to grow a lot. Revenue is just. It's currently 850 million, and the projection for next year is 600 million, then 680 million, then 2.4 billion. That seems crazy, right? Okay, well, let's put it in. 2. Okay, well, if they hit that 2.4 billion, they're 47% undervalued. That's really interesting, right? That's a big assumption. Why is revenue projected to go up 4x? What are they investing in? What is BlackBerry investing in? Now 22% overvalued. Finally, some hope. BlackBerry's Q4 results showed signs of improvement, with overall revenue beating estimates and growing nicely. However, Q1 now I'm kind of curious why investors. Well, revenue is up. It's up about 50% year over year. Okay, so they don't sell phones anymore. Cybersecurity is about 40% of the revenue. IoT, Internet of Things, and licensing, 260 million. I guess it's like Nokia. They're selling kind of like the technology, not the hardware anymore. Okay, 84 Lena Florida. I guess they're trying to kind of pivot. Yeah, they don't sell phones. I don't think they sell any phones. BlackBerry has transitioned into a cybersecurity company specializing in encryption-based services for various industries, including medical and automotive. They've come a long way from the early days as a smartphone manufacturer. Could be a good investment because cybersecurity is pretty, like CrowdStrike is like, that's what they do. And their market cap is 75 billion. I mean, they probably have in revenue of 3 billion. So it's not like they're trading at 25 times revenue. So, and the reason they're trading at such a high valuation is because I think investors feel they're going to be, they'll grow into their market cap. But I don't know. I don't know about BlackBerry. I guess I'd have to try to learn more about what they're doing, but because if you're bearish and you want to see negative things about a company, you'll find articles like this: future remains uncertain. And within the same website, you'll find articles saying the stock is undervalued. Because you'll have 10 analysts writing positive things, 10 analysts writing negative things. Oh, come on. Over the last 90 days, stock has fallen 6% to 319. Revenue has been flat over the last 3 years. That's not true. We saw their revenue is up a lot. It's 850 million. It's up 50%. Oh, I guess it is down from 3 years ago. Okay, so that's what he means. Flat over 3 years. Revenue flat over 3 years. Our EPS has grown by 20%. Revenue is forecast to decline by 20% in 2 years. Earnings are forecast to grow by 70% in 2 years. Yeah, I could see why people might want to stay away from this. Any other stocks people are looking at? Price target 584 from 636 to the current price target is an average from 8 analysts. New target is 17% above closing price. BlackBerry's aerospace and defense market with new future airborne. Yeah, I guess this is a sell. It's a pass. The stock. Where's that website? Oh, here it is. So the top gainers. This is the top gainers from Friday. Indonesia Energy, 80%. Mobile Health. Sand has been doing well, but looks like it's at the top of a channel on the 2-week chat and started to go back down. Sand. Oh, Bancos. Okay. 75 billion market cap. They're a Spanish bank. A Big Five. Yeah, Big Five is getting killed. It's a tough industry, right? Retail is, it's just a killer industry, right? Retail. There's no future targets. Rivian. Shaky. Why does every stock I pick, you think it's such a bad? People want to know. People are interested. Yeah, Big Five is 319, 71 million market cap. Sheesh. Well, it really came down. Is that right? 71 million? Rivian is a great EV company. I don't know what you're talking about. I cover all different stocks, whatever people ask for. I'm sure I covered I've covered Nvidia, like Meta, stocks like that. Zim's a good stock, right? Yeah, their revenue is in the toilet. That's real bad. Huh. Wow, I think they're gonna go bankrupt, this company. Yeah, I don't think they I don't think they have much of a future. Let's. Oh, they don't have any debt. I'm surprised. Did they just file bankruptcy or something? How could they have no debt? Yeah, it's I don't think they're going to be around much longer. I'm surprised they lasted this long. Do they still pay a dividend? Yeah, they did bring their dividend back. If they don't go bankrupt, they could like 50x. So either they're going bankrupt or they're going to 50x. It's hard to because the stock is just so low. I wonder if they split. They didn't split. Yeah, right after COVID, they were doing well. Over 40. Yeah, I don't see it with this one. Okay, I guess not many comments lately, so I guess I'll log off now. Thanks for joining. I start a new job tomorrow, so hope that goes well. Okay, have a good night.